Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and today we have another edition of Market Pulse with eGirl Capital. Joining us on the other side of the mics are my guests, Hedgedhog of eGirl Capital, as well as Larry Cermak, VP of Research at The Block. Before we turn on the mics, we were talking about the recent price action. I feel like the last time I had the two of you on, we were a bit more gloomy in the wake of the meltdown of FTX and everyone losing all of them.
That was pre-FTX. That was pre-FTX.
It was that long ago?
Yeah.
Yeah, it was that long ago.
I still feel like we were gloomy.
We were
gloomy.
Thinking
of the episode.
No, we were actually gloomy.
Yeah.
But I don't think I was. I don't think I was that gloomy. I don't think I was. Expecting anything like what happened to happen. I don't think Huck was either.
Yeah.
Yeah.
Nobody was. Before we dive in, I want to take a moment to thank our sponsors. What's next for digital currency after a brutal 2022? While the core promise of crypto hasn't changed, digital currency is still forming the base layer for a new global commerce infrastructure. From merchants at the point of sale to corporations that want to pay suppliers and even employees more efficiently,
Circle has always seen itself as a connector of the traditional world and the new world of digital currency. It's like building houses. What's the foundation, and can you get the foundation right?
Throughout Q1, I'm happy to host leaders from Circle here on The Scoop to give listeners the chance to hear how one of crypto's most prominent builders is paving the way for digital currency utility. Have you ever wanted to use DeFi without being seen? RAILGUN is a leading DeFi privacy solution on Ethereum. It's also a leading privacy solution operating across Binance Smart Chain, Arbitrum, and Polygon 2. And yes, that includes DEX trading. DeFi and privacy together at last. Visit railgun.org to find out more. This episode is also brought to you by Flare, an EVM-based Layer 1 blockchain with secure, decentralized access to information from other chains and the internet. Flare's native interoperability protocols provide developers with a variety of high-integrity price and event data, including detailed transaction proofs from other chains and information from Web2 APIs. Build better and connect everything at flare.network. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of The Blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. So now we have, pretty good price action. I was looking at the year-to-date chart, which is really just a monthly chart, and Coinbase is up 98%. Bitcoin's up something like 44%. And so obviously it's kind of like the meme where it's the big red drawdown and then the little tiny green inch up. But are you surprised by the price action? And I think both of you are of the opinion that this rally doesn't have legs.
Yeah, no, I don't think we're really surprised. I think the last time we chatted, we were pretty gloomy, but it was like a kind of, this is where you can kind of buy spot and, start DCAing spot. I think some stuff obviously has caught us off guard. Stuff like Aptos, which is up like multiples. That is kind of crazy in my opinion. But, in general, like BTC and ETH, like being up this much isn't really a surprise at all.
Is this rally driven by retail or institutions? Do you have a sense of that?
My sense is retail, and that's why I don't really think this is going to last. We're seeing like a lot of degenerate behavior coming back really quickly, I think. Cantos and all these like new NFTs, and there are new Ohm forks and stuff. Like all this kind of behavior is like, people haven't really learned anything, right? And they're really risk on already. So yeah, I feel like retail is a big factor of this recent activity.
What's different about this time relative to previous cycles? Is it the lack of institutions that's not going to give it footing? What's your impression, Larry? And is there any data that indicates that?
Yeah, that's a good question. I think Kind of like Hawk said, I think there is definitely retail buying some of the speculatory assets on these smaller assets. I think on the Bitcoin ETH side, it's probably a few large traders that just decided that the bottom could be in, right? And they're just kind of bidding on it. And we see a lot of bidding activity in the order books, especially when there's relatively thin liquidity. So I think that's like one of the reasons. I'm like Hawk, I'm not sure if this is going to be sustained because it's kind of unclear to me. But to answer your question, I think the biggest difference is that right now we don't really have anything to kind of drive the rally to have legs under it. And I think there is still a lot of uncertainty in the macro markets. And, you're talking about Bitcoin being up 40%, some of these assets being up multiples, ETH is up a lot as well. Some of the riskier stocks or some of the tech stocks as well are up 80%. I think Tesla is up from somewhere like 100 to 180 or something, right?
Yeah.
We've just seen really large increases across the board in just risk assets overall. I still am convinced, just like I was on the last two recordings we did with eGirl, that we are still waiting for more certainty from the macro markets. And, the asset prices are still moving in high correlation. And the correlation right now is like 95% or something to NASDAQ. It's insanely high still. But we are seeing some massive outperformers, like Hawk mentioned, Kanto, Aptos, a few of these. And I do think that that's coming from retail money and, smaller traders are kind of gambling on some increased enthusiasm in the markets.
Yeah, a big difference between this and like 2019. I feel 2019 was definitely more short liquidation field. Like we definitely saw like a lot of liquidations on BTC, maybe 2 or 3 weeks ago. But now we're not really seeing that. I think a good sign for that for me was like last night, BTC kind of went past 24K, right? And we really saw like nothing. So I don't think there's like any shorts really trapped on these majors anymore. And if we were to go up, it really just has to be like pure spot buying. Or, BTC has to kind of chill here and wait for the shorts to kind of accumulate again. But, right now in the market, I don't think there's many left on those majors. How
much capital is sitting on the sidelines to save our listeners' bags?
A lot. A lot. I think there's no question. There is a lot. So that's always reassuring.
I think there's a mix of elements here in addition. Just the macro environment's playing one piece of what's maybe keeping the institutional part of the market from entering. But there's also this lack of infrastructure that exists now where they don't have anywhere to trade, right? All of the counterparties that they were used to dealing with a year ago are gone, whether it's Alameda, Genesis, BlockFi Prime, the list goes on. So many people got wiped out. So even if they wanted to put on a position, they're probably afraid to, especially in OTC land.
Yeah.
Yeah, I agree. I think even for us, like we were mostly trading on FTX, and for us to make that change to Binance also took like a period of adjustment. Like we're still adjusting basically.
Oh, really?
Yeah, people underestimate how hard it is to just like pivot from one exchange to another. We lost like a lot of the tools that we had built, and Binance does things slightly differently, and we have to account for that as well in our infrastructure.
Interesting. Yeah, that's a good point. So that's definitely one impediment that's adding a level of friction to the market. Maybe that's keeping folks from shorting as well, right? Because where are they going to do that? It's probably would have been on an FTX or would have been FTX themselves. Would have been Alameda on FTX. So what about NFTs? That's another, it's almost like it's its own separate market right now. A lot of development. Their infrastructure seems to be growing at a much more steady clip than the trading side, or especially the DeFi side. DeFi seems just cooked.
Yeah, I think NFTs are definitely, like you said, unconnected to the rest of the market in a lot of ways. But there's also, shared capital, shared enthusiasm overall. We've seen a bunch of volume come in for NFTs overall over the last, January and December. Really, there was already some sort of an uptick. I think there's a few reasons. One is that just in general, market is a little bit more keen to risk assets overall. But secondly, also there's a bunch of kind of interesting product releases as well. Like Blur is launching, which is kind of grabbing a lot of market share overall from OpenSea. I think they're currently about 30 or 40%. They're launching February 14, the token, and there's incentives for creating some of that volume as well. SudoSwap also just released the token, even though it's not transferable. So there's just a bunch of things happening in NFTs that I think are, again, sparking some interest overall in the market. There's, like you said, Frank, continuous development, and it's because there's like so little fundamental analysis you can do. Some of these rallies can be started kind of almost out of nothing, just a trend reversal. But I've definitely noticed that as well.
Yeah, I think like different to the trading market, the NFT infrastructure has just really gotten better, day by day. So, there's like no institutional side to NFTs. Everything is DeFi, on-chain related. Like Coinbase, I think they like recently just shut down their NFT project thing that they were working on. So yeah, on-chain capabilities for NFTs have just been getting better. So there's nothing to adjust to. And
going back to the different tokens that have had rallies, it doesn't seem like it's underpinned, going back to the point Larry made, by anything fundamental. Or maybe, Hog, you made this point that it seems a bit more just, degenerates punting. I'm like looking at the number of new addresses on Aptos, and it's like very steady. I mean, relative to last month, it's lower. These new charts that we just added to the dashboard, transactions on Aptos, the 7-day moving average, it's like way down from like 1.5 million to 600,000. So are there any fundamentals at play?
We've done a research piece recently that people can go check out that looked at the on-chain activity on Aptos, and it's like actually very, very steady compared to the price action that you're seeing. So in terms of on-chain activity, it's not really because there's a lot of fundamental growth there. I think the reason is different, and that's because a lot of these coins have relatively low float, and some of these are relatively shorted, and they just become interesting targets for people to, punt on in terms of just longing them. And I don't think a lot of this is spot driven. And I think, the same is really the case with Canto. Maybe that's not really futures driven, but in that one, I think it's more about, well, you don't actually have many people that can continuously dump. There's not a lot of unlocks, and the float is still relatively low as well. And you just create a narrative, and the narrative somehow sticks, and then it becomes a kind of almost like a CT favorite for punting on. I don't think there's much of a fundamental reason. And when the price of Canto goes up, of course, there's going to be slightly more interest in like the Canto NFTs or the Canto projects building on top. But in general, like Hawk, I would be relatively cautious believing in these trends and for them to continue for a really long time. Like the Aptos price is insanely high based on everything else, any sort of realistic comparison you can make. But that doesn't mean that the price is not going to go higher. But like in terms of like longing it or holding that for a long time, it's very risky, and it's definitely not for me.
It's cool to look at the volumes. We should actually write a piece on this. They're like surging. So like, I know you say that this market's boring, Larry, but I mean, it was so dead last month.
I think it's like more boring for me because I'm not really bought into any of these narratives. But in terms of like actual, there's definitely more liquidity than there was in December, and there's definitely more enthusiasm in the markets overall. And there's definitely new like narratives coming along. I do think it's interesting. But for me specifically, it's boring, but it's definitely like in terms of like being as objective as possible. December was much worse. Everyone was just like kind of like everything is going to shit. Everything is terrible. Now there's a lot of people that believe that the bottom is already in and that, it's safe to start buying spot, and the atmosphere overall of just in general has improved a lot.
Hog, what say you?
Yeah, I mean, it's definitely possible that the bottom is in. But yeah, like Larry said, there are some tokens out there that you still do need to be wary of buying. We're probably ragging on Aptos a lot, but yeah, it's really crazy. Like, at least for Canto, like, the price is up, but also the activity is up there, right? But with Aptos, it's like price up, but, how many more people are really using this? Like zero almost new people. So some things are just hype, but yeah, like in general, even if macro goes, really, really bad, I would agree. Like for some tokens like, Bitcoin and ETH, like, yeah, sure, you could buy here and then start DCA. Yeah, I don't see any issues with that.
Not financial advice.
Not financial advice.
Davis wanted me to ask some questions about Ethereum's upcoming Shanghai upgrade and the subsequent opening of ETH withdrawals. How do you think traders are positioning themselves on that?
I personally think that that's a super kind of hyped up narrative. I think a lot of that is priced in already. Like people are saying, oh, everything is going to, all this is going to unlock. People are going to get spooked and a lot of them are going to sell. There's some analysis that I saw people doing analytics, kind of like the entry price at which some of these Ethereum holders have staked in. And it's saying that a lot of them are losing money. I think a lot of that is really kind of made up narrative. I think it's overblown a lot. There are really small limits on how much is actually going to be unlocked on a daily basis from the Shanghai upgrade. And I think just gradually, I would assume most of the people that staked are actually relatively long-term oriented. They're spot backs that they wanted to earn some yield on. So I personally would be actually surprised if a lot of that ends up in dumping. But it is a narrative that I see on Twitter more and more that like, oh, I'm going to only enter after the Shanghai effects are a little bit clear. I personally think that makes no sense. And I think if anything, the market is a little bit spooked, and I wouldn't be surprised if the effect of the event itself is actually a fairly non-event, but still kind of obviously paying attention to the broader markets.
Yeah, I think I would just agree. Overhyped and probably non-event.
Post-merge, I think we reported yesterday Ethereum supply reached an all-time low. But is deflation sustainable as layer 2s continue to gain prominence? Will ETH become inflationary again?
I personally think that it could actually be deflationary. Like we're talking about, Ethereum is not used as much. The gas fees have been pretty consistently around 20 over the last, 2 months or something like that, very low. I think if there is an increase in activity and if the bull market actually does come back, we're talking about gas fees being, 5 to 10 times higher overall on average. And a lot of that will go into Ethereum being burned itself. So I do think that if bull market is back, I think it will become one of the most interesting assets for any investors to buy because the risk is relatively low, kind of like Hawk said, like you're not gambling on some shitcoin that just went up a lot, but you're gambling on something that has been around for a long time, has a lot of these new technologies coming, even though they'll have separate tokens. And on top of that, the token economics compared to the last bull market has been insanely better, in my opinion. So I would not be surprised if Ethereum is one of the strongest performers in a proper bull market when there's actual activity on chain, because I think it can lead to actually, less supply being dumped on the market. You just don't have as much coming on. So I'm quite excited about that myself. And I think if I were to pick one asset to hold for the next 5 years, it would be ETH.
Okay, but what about looking at the other layer ones? There's too many. We got to cut them in half. It's like, I got to have them all on the podcast, and it's like there's 10 of them. So I've got to learn about Polkadot and Solana and Avalanche. It's just annoying. Cosmos, Aptos, Avalanche, Polkadot, Cardano, Solana. Who comes second in that scenario for you, Larry?
I personally think that I still think that the layer 2 tokens are going to be something that I would focus on myself. I think we still basically only have the OP token on the market, maybe Polygon if you consider it kind of an up and coming layer 2 token. But there's going to be Arbitrum token coming on live soon, Starknet token, ZK Sync token, Scroll token. A lot of that is going to flood the market. I think that's going to be really interesting. Like, how do you decide how to price that? How does that compare to how, Ethereum is trading? Like, stuff like that I think is going to be really exciting. In terms of the second layer 1, I'm not as involved as I once have been. I think the second one that I'm probably the most interested in is either Cosmos or Solana still in some ways. I still like their activity the most.
Yeah, I still like Solana too. But in saying that, like all these L1s have really kind of gotten to a price in the past few months where you don't really need to be right on who the number 2 is, right? They all come off so much that, everyone was talking about single digit Solana. Like that's a really good bet. And the same is with all the others like Phantom, AVAX. You can name all of them, right? So yeah, I don't really think it's a question that you have to have an answer to, make money in this market. Like you can make money and be wrong very easily.
I mean, Larry's the poster child of that.
Yeah. Wow. On the podcast, that's mean.
Can I shit on Doge in the podcast where he's always right but doesn't make money?
He does seem to be right a lot.
He's also wrong a lot. let's not kid ourselves.
Yeah. He's wrong whenever you listen to him.
Yes.
The core promise of crypto hasn't changed. Stablecoins can bring faster payments at internet scale, from merchants at the point of sale to corporations that want to pay suppliers or even employees more efficiently.
Circle has always seen itself as a connector of the traditional world and the new world of digital currency.
USDC is more than just a stablecoin. USDC is also an open source platform.
When our transactions actually final and you can't change them anymore, that's another great quality property of cash, because when it switches hand, it's final. Right? Can you digitize all those good quality properties and bring that in a digital form?
USDC by Circle is at the forefront of this innovation. And that's why The Scoop is partnering with the folks at Circle to tell you guys why and how our industry is moving.
A lot of us who have built USDC, myself included and Jeremy included, we are technologists. So we approach this problem from a technology point of view.
Have you ever wanted to use DeFi without being seen? RAILGUN is a leading DeFi privacy solution on Ethereum. And it's also a leading privacy solution operating across Binance Smart Chain, Arbitrum, and Polygon too. Shield your funds and use them privately on your favorite DeFi apps. RAILGUN's cutting-edge zero-knowledge system encrypts your data from public view. And yes, that includes DEX trading. DeFi and privacy together at last. Visit railgun.org to find out more. This episode is also brought to you by Flare, an EVM-based Layer 1 blockchain with secure access to information from other chains and the internet. Flare's State Connector acquires detailed transaction data from blockchains and information from Web2 APIs in a decentralized way, so it can be used securely, scalably, and trustlessly in applications running on the network. Paired with the Flare Time Series Oracle for decentralized price and time series data, Flare delivers a developer-focused blockchain with secure native access to more off-chain data than ever before. Build better and connect everything at flare.network. How much of an overhang will just FTX, DCG have on the market? Have we moved completely beyond the credit crisis and now macro is back in the driver's seat?
Yeah, I think macro is back in the driver's seat. I think we're at prices where we don't really need institutional buy-in at these prices for these prices to kind of remain. That's kind of where we're at. And that's why I don't think, DCG and FTX are particularly important right now. We're at prices where if you only had retail interest, all the tokens would still probably be around here.
That's a good point. So who's going to trade on Kyle and Sue's new GTX? Actually, here's a better question. Okay. Would you rather trade on BitMEX, FTX relaunched by John Ray, or Sue's exchange?
That's a tough one because for me, BitMEX always had the best UX. I still think it has the best UX. It's a really tough one. Like, I don't know what BitMEX has to do to get its shit together, but that's still my favorite exchange of all time to trade on. But, they haven't had they haven't had their shit together for years, right? So it'll probably be FTX, then BitMEX, and then I think it's called Open Exchange now, but yeah.
That's a tough one. I think... Dude,
the fact that everyone's taking so long to say BitMEX, like if any executive at BitMEX is listening to this, you got to open your eyes, man.
I know.
This is really bad for you.
Yeah. If I were to choose from these immediately, I would say BitMEX. If FTX was being run responsibly, I think that's a decent option as well. I would never, ever pick the 3 Arrows exchange or the CoinFlex reboot. I don't trust these guys at all. And I obviously don't trust the FTX guys as well at this point, but if it's run with new people, just with the same or the similar mechanism and the similar UI UX, I quite liked it. I do kind of miss the interface, honestly.
Well, I wonder how much of what made FTX great was Alameda sort of just piling in all that liquidity at a massive loss.
Yeah, I think you're totally right on that. Like you said in your podcast with Kanaf, I think a lot of their success in retrospect was because they had so much liquidity for these new coins, where they just jump-started, a perp for whatever coin. And that was really appealing for a lot of people because they had most of the stuff they had the first. And so if you were really involved in the market, you wanted to bet on the upside or downside of new listed coins, FTX was really good. But in retrospect, that's probably not really easy to do, or really is even possible for it to be profitable when you're listing all these perps on super liquid coins. And, you want to bet that they're going to drop in price. Who's on the other side? And I think in a lot of ways it was Alameda.
Yeah.
Another element. Yeah, go ahead, Hog.
For us, it was a combo of the liquidity and the UI UX. I think, the user experience was really unmatched except for BitMEX. And BitMEX just didn't have the pairs for us to trade on. And we probably pivoted when a lot of the market pivoted, after March 2020, April, May, that's when I started being more and more on FTX versus BitMEX. And so what surprised me while FTX was around was people would always complain about the predatory market makers. And we didn't really see that because I'm not sure if people realized, but they would always quote best bid and best offer. And all you would do is you would just market sell into that best bid or best offer, and they would just refresh it. And then you just market sell again. So actually the liquidity that they provided was a lot higher than what they actually showed on the order books. And they would just take so much liquidity on these random shit coins. So that's why we really love them. It's probably a combo. And I'm not going to lie, trading on Binance, the user experience is just not the same. All these sub accounts and stuff, it's just overly complicated. And we're having a lot of trouble adjusting actually.
There's also a trade-off, I think, between, at least with BitMEX. I was speaking with someone who used to work there, and he said when FTX was coming on, the big benefit they brought to the market was the speed and efficacy of the liquidation engine. Whereas, obviously BitMEX had all those issues with the
ADL.
Yeah, exactly. And so while their liquidation engine wasn't super responsive, it was more accurate in terms of the data. And also FTX apparently kept asking them for all these features, BitMEX, or Alameda rather, before FTX launched. And ultimately that's why FTX launched, was because BitMEX wasn't responding to all these feature requests that Alameda had. And so it's funny, which is a little bit different from how they would talk about we wanted to provide traders with a better exchange. They really wanted to provide Alameda
themselves
with a better exchange. I don't know if there's a question there, just an anecdote.
There isn't.
There's no question. So what are our closing thoughts to round this out?
I think my closing thought would be, I think similar to the last time. One is, if you're bullish long term, the only answer really is to buy spot gradually. Don't FOMO into coins that are shilled on CT constantly. There's a lot of PvP in the market right now, where a lot of traders on CT will try to get people excited about a certain thing, and then it will just get you wrecked. So I will say just take it slow. And if you're bullish long term, the only answer really is to buy spot and hold for long term, and don't FOMO into crazy narratives. In terms of what I'm the most excited about, it's still the layer 2s and the layer 2 tokens, and how the activity will actually end up panning out there. I'm still insanely bullish on Starknet. I'm pretty bullish on Polygon switching from the proof of stake chain to the ZK EVM chain. And I'm quite interested into how ZK Sync and the Scrolls launches go as well. But I'm very convinced that there's going to be a lot of activity there, new projects launching, new use cases. There's going to be a lot of opportunities, I think, in that environment. I don't know if it happens in the next month or 3 months from now, but it's probably the most exciting narrative I'm watching closely.
Yeah, I think my closing thoughts would just be donate for the sake of aping. This is not really a risk-on period. It was, a period where you could just buy what you really loved at a good price. But it isn't one where I would be, degen farming or, chasing all these degen projects. We're still seeing projects rug on a daily basis. And that to me, the risk reward just isn't there. So yeah, I would just play it safe. Same thing I said last time, buy spot, buy what you love, and buy what you're willing to hold.
I guess that means I need to buy Larry. All right, guys. I want to thank you both for joining us on the show today. Really appreciate it. Thanks again. Once again, we've been joined by our guest Hedgedhog of eGirl Capital, as well as Larry Cermak, VP of Research at The Block. Gentlemen, thanks for being on the show. See you next month.
Appreciate it, Frank.
Scoop will be back for you again with another great guest. Have an awesome day. Looking for more great insights from The Block? Meet The Block Pro. Powered by the industry's most entrenched team of reporters and research analysts, The Block Pro provides research, news, and data in one easy-to-use platform for institutions evaluating opportunities in digital assets. For more information about how Pro can help you and your team make smart decisions, visit theblock.pro today.